Blackstone is having a run on one of its funds that it used to buy real estate. You know, when I did a video on showing that Blackstone was going into buying residential single-family homes and renting them out. Remember that Blackstone? Yes, that Blackstone. They are now saying to their investors,
no. I know that you guys are coming to take money out because the housing market is sinking lower and lower, and demand is basically
dead. Right now, and it is causing a lot of values to drop. Interest rates are continuing to go up, and the Fed is continuing to push those interest rates up. And don't forget, guys, I have a Christmas sale going on, 40% off for my real estate investing beginner course. Check it out. I will have it in the description. Also, I will have it pinned in the comment section. But let's jump right into it, guys. Blackstone will limit investors' withdrawal from a $125 billion real estate investment fund following a spike in redemption requests, which redemption requests would be individuals for whatever reason are saying,
yeah, I want to go ahead and take my money out of this.
For some reason, who could guess why investors want to take their money out of a real estate fund? I don't know. Maybe guys, just follow me here. Maybe investors are seeing something where they need cash in their pocket. Maybe that's the reason.
He knows.
Maybe they're trying to sit on the sidelines like I've been telling everyone with a purpose. With a purpose. And they're getting their wallets and checkbooks ready, and they need to be a little bit liquid for that event.
How the f did you know that?
According to a New York-based firm, following announcements that it will sell its stake in 2 Las Vegas properties. If you guys didn't know, Blackstone owns some stake in MGM, and they are selling that stake. Only 0.3% of the fund net asset will be available for redemption in December, according to a notice sent to investors Thursday, following a surge in requests in November, October. Well, guys, November, October, remember when we were doing videos that I was saying, you guys, holiday season is the time when you will see a lot of things changing, you know, better for you guys, but in the market itself, worse, right? And we're starting to see that now. Now these huge funds that had their hand in buying these big, huge blocks, maybe in some situations, entire neighborhoods, guys.
Nobody going to stop me.
They are now in a situation where now their investors are wanting their money back. They're saying,
hey, you know what? This is not what I thought it was going to be, so let's go ahead and cash out right now.
And the fund owners, which would be Blackstone, are saying, hey, we can't allow you guys to do a run on us because the fund would basically collapse. And they do not want that, guys. And November and October, guys, we know what's happening. Holiday season, Black Friday, all the way up until January. It's going to be an exciting time, guys. When you look at all of these companies are showing you guys what their balance sheet looks like. And we're starting to see these cracks from these companies that told you guys they were making tons and tons of money and investing into real estate and buying whole housing market areas. We're starting to see those cracks, and those cracks don't look so good when the demand drops like it is currently. And when demand drops and you guys sit on the sidelines and you're saying,
look, we want affordable homes. We can't buy $500,000 2-bedroom, 2-bath houses.
When you're getting buyers to do that, all of a sudden, we start to see that the market is coming down.
Something ain't right.
Remember, guys, demand is going to create the value. And if there is no demand, the price is going to drop. The same thing occurs with interest rate. The interest rate will determine the demand. So it's the same exact thing. Interest rates go up, demand goes down, values go down.
That's it.
And now we are starting to see that. In October, Blackstone received $1.8 billion in redemption requests, 2.7 of its net asset value, and has already received requests in November and December exceeding its quarter limit. This is the thing. When you tell your investors,
hey guys, look, we have a lot of redemptions. There's been a run on this fund. and we're gonna limit the amount of people that can take out.
What do you think investors are gonna do? They want their money now more than ever. They're like,
Oh no, something's going on. Why is it that there is even a run on this fund? Why is it?
so they want their money out even more. So of course there's going to be more redemptions or more requests to pull your money out, because now that you know that 43% of people are pulling their money out of this fund, 43%. When that happens, I want my money now.
Show me the money.
Look, come on, put it in my hand. Give me my money. I want my money now, because there's something that everybody else knows that I don't know. It's obvious, right? And I'm telling you guys, listen, here's the secret. They're getting ready to put their money in properties that will be cheaper than they are now. I know. Surprise.
I knew this was gonna happen.
Only 43% of the redemption requests from investors were fulfilled in November, totaling, get this, guys, $1.3 billion, guys. Please remember, guys, this fund is a wealthy person's fund. Individuals who are not wealthy will not be allowed to get into this fund.
He's a brokey.
So with that being said, the writing is on the wall. Commercial real estate is going down. We're seeing the numbers tick down. We're seeing home prices going down. Just in general, guys, the real estate market is ticking down, and down. And this is not crazy, because we've seen real estate go up 20, 30, 40% in some areas. So for it to downtick, is that really a surprise that you would think that the cycle would come back around and it would not continue to gain 20, 30, 40%? I know some of you think that this was going to continue to happen forever, but I'm here to bust your bubble. And if you've been, not underneath a rock, and you're seeing exactly what's happening with the housing market, we're starting to see things go down. Austin, Boise. Following the announcements, shares at the company fell about as much as 10%. Now, here's the thing. With Blackstone, the general consensus is this. When you start seeing these wealthy individuals pulling money out, when they're doing this, when you're seeing Blackstone, this one particular fund, not as a whole, but just this fund kind of collapsing within itself, them limiting the amount of money of people taking their money out, it has to make you think, what is actually going on in this housing market? Does this mean that the housing market is going down? Is it trickling down? Are people afraid of losing money? And the answer to that is yes. Wealthy people, everybody who has a vested interest in the housing market does not want to lose money. But this could be a situation where if you look at this and use this for research, watching this video or doing your own research, you can kind of see where the market is going. And you have to be ready, guys. This is the biggest thing I say on my channel all the time, other than do not overpay, is you have to sit on the sidelines with a purpose. Get your money together, save more money, have your emergency savings account, make sure that your credit and everything is ready to go, so that when you decide for you and your family to get into a new home, when you decide to jump into this housing market, you're ready.
Y'all ready for this?
You don't have to do all of these things. As soon as things start going down, you have to wait 4 to 5 months before you're even able to even start. And it may be too late. Let's hope that's not the case, but I want you to be ready right now. Use this time that we have right now to get ready. And Blackstone won't be the last. We have seen the graveyard of all of these companies that are trying to throw so much money at the housing market, buying up all of these properties, only to come out to realize,
this wasn't really a good model to begin with, and we're using AI and stuff like that to determine what the values will be.
And when people don't want to buy overpriced homes, when interest rates aren't low as they were before, go figure. People don't want to spend that much money at an 8%, 7%, 6% interest rate on an overpriced home. So once again, guys, you will not get all of the value out of just watching this one video. I promise you, if you watch this video, to understand buying and selling in this housing market, get into your first rental property, and also any financial news I'm providing. See you on the next one. Thanks.